Hey guys, I'm Greg Hardy, and I'm going to show you how to become a millionaire completely tax-free by investing less than $20 a day. No joke, no clickbait. This is what schools should be teaching, but for some reason they don't think it's important or they just don't know how to teach it. This is the type of video that can make a real difference in your future because the sooner you implement this, the more money you're going to have. Time really is on your side when it comes to investing. I'll prove to you later in this video that the difference of waiting just a few extra years has the potential to cost you tens, if not hundreds of thousands of dollars for your future self. This is the stuff that I wish I was taught and knew about at a younger age. And by the end of this video, you're going to have the knowledge to change the financial course of your life. So sit back, relax, and watch this video all the way through. I think you'll find it extremely helpful. The same way I find it helpful if you hit that like button. So let's get started. So let me start by breaking down what a Roth IRA is. The Roth IRA was named after Senator William Roth of Delaware and became an investment option back in 1998. The initials IRA stands for Individual Retirement Account. It's super easy to open up a Roth, and later in this video I'll show you how and where you can do that. Roth IRA allows you to contribute your after-tax dollars into it. So let's just say, for example, that you get a paycheck every 2 weeks of $3,000 from your employer. There's a good possibility that taxes have already been paid. Look on your check and you'll see the words net pay or net income. This would be the amount you have left over after you pay your taxes and are free to save it, spend it, or invest it. And since you're watching this video, it's safe to say that you're wanting to know how to put that money to work for you so you don't have to work for the rest of your life. So the money that you are contributing to a Roth is leftover money and you don't have to pay taxes on it anymore. So let's go over how much you can contribute into one of these accounts. In 2024, an individual under age 50 can contribute a maximum amount of $7,000 into a Roth IRA. Also in 2024, the maximum income you can earn and still contribute to a Roth IRA is $160,999 for single tax filers and heads of household. However, you cannot contribute the full amount of $7,000 if your earnings exceed $146,000, and therefore your contribution amounts will be reduced. Married couples filing jointly will be capped at $240,000, with phase-outs starting at $230,000. Phase-outs means that your contributions amount are required to be less the closer you get to capped out earnings. You can withdraw the money you've placed into your Roth IRA with no penalty at any age, but not the earnings. So let me explain. At age 59 and a half, you can withdraw both contributions and earnings with no penalty, provided that your Roth IRA has been open for at least 5 tax years. A withdrawal of Roth IRA earnings before you reach age 59 and a half is generally subject to income taxes and a 10% penalty. Hopefully you're watching this when you're young because you have the greatest advantage over someone like myself, and that's compounding interest. The more time you have to grow your money, the better. Let's put that into perspective with a couple of scenarios. For example, say beginning at 18 years old, you contribute $5,000 per year into your Roth IRA. That's a little over $400 a month and less than $14 a day. By the time you're 59 years old, you will have over $1 million in your Roth at just a 7% rate of return. That means you only had to contribute $205,000 over those 41 years, and it's now worth over $1 million. If you're able to max out at the full $7,000 per year and wait to retire at 65, you would have over $2.3 million starting from nothing. That's 100% tax-free money by investing less than $20 a day. Let's imagine you didn't start investing until you're age 25 and contributed the max of $7,000 a year until age 59. You'd only have $897,000. So by contributing an extra $2,000 a year, you'd have less than if you started just 7 years ago. However, if you could wait to retire at 65, you would have over $1.4 million at retirement. Let's start at 35 years old and keep everything else the same. You'd have a little over $400,000 because you were only able to contribute $168,000 and it has half the time to grow. If you waited until you're 65, you'd still have just under $700,000. As I said earlier, you can withdraw your contribution amounts at any time without penalty or taxes. Say you invested $2,000 into your Roth account and it grew to $3,000. You can take out your $2,000 without fear of taxes or penalties even before the age of 59 and a half. However, the more you have in your Roth, the more it's going to compound and grow, making you more and more money. So I wouldn't recommend taking any of the money out, but if you have to, for whatever reason, you can. You cannot, however, remove any of the profits or that will be subject to taxes and penalties. Also, one thing to note is that the IRS updates the Roth IRA contribution amount every year to account for inflation and other changes. So chances are, as you get older, the contribution amount will also increase, giving you even a greater chance to make more money. Back when the Roth IRA began, the contribution limit was $2,000. By 2008, it was $5,000, and by 2019, it was $6,000, and currently in 2024, it's $7,000. And if you're over age 50, there's an extra catch-up contribution limit of $1,000. So chances are 20, 30, even 40 years from now, contribution amounts will be much higher than they are now. Another thing to know is that your contribution year isn't from January 1st to December 31st. It is from April to April. So before the tax deadline, which is usually April the 15th, you can contribute to the previous year's Roth IRA. So technically on April 14th, you can contribute to your previous year's Roth IRA, and on April 16th, you can contribute towards your current year's limit. So if you get a tax return and you want to invest it, there you go. While I use 7% average gains as an example, that number is pretty conservative. In general, when people say the stock market, they're typically referring to the S&P 500 index. The S&P 500 is a collection of just over 500 of the largest publicly traded U.S. companies. The S&P 500 accounts for about 80% of the total stock market gains. The average yearly return of the S&P 500 is 10.04% over the last 30 years as of the end of December 2023. This assumes that dividends are reinvested. Adjusting for inflation, the 30-year average stock market return, including dividends, is about 7.32%. Some years are good and some years are not so good, but with patience and consistency, you should make solid gains. So here's how you can go about opening a Roth IRA and start investing. You can simply go online and set up a Roth IRA through sites like Schwab or Vanguard, just to name a couple, but there really are several ones out there. I have personally used Schwab for years. The entire process shouldn't take more than 20 minutes or so. It's super straightforward. Trust me, it will be 20 minutes well spent. Now, if you have kids or are under the age of 18, you can still open a Roth IRA, but need a parent to co-sign with you, but you will have to show earned income. It's called a custodial Roth IRA and is owned by you as a minor, but is controlled and funded by your adult custodian until you reach legal adulthood, and that age can vary by state. A parent just can't open a Roth IRA for you and put money in there, but they can match your contribution amount not to exceed the maximum contribution amount. In this case, it's $7,000. So, for example, say you make $2,000 babysitting or mowing lawns. You can contribute the $2,000 and your custodian can match that amount. Once the account is open, now is your opportunity to contribute your money and invest. Since the Roth IRA isn't the investment, it's just the account that holds the investment. You'll need to find something to invest in. You can invest in stocks, ETFs, mutual funds, or any combination of those. Just to keep it simple and take a lot of the guesswork out of it, you can invest in a broad market index fund like SCHB from Schwab or VT Sachs from Vanguard. These funds are comprised of thousands of stocks, meaning you don't have to guess which stocks to buy. They also have an extremely low expense ratio, which won't cut into your profits. An expense ratio is how much you'll pay to own a fund over the course of a year. For example, SCHB has an expense ratio of 0.030%, meaning that for every $1,000 you have in the fund, you'll pay $30 a year. It's not a lot, but worth noting when you're looking to choose a fund that's right for you. You can also invest in all of your favorite companies, and if they pay a dividend, that grows tax-free too. Keep in mind, though, that owning individual stocks has the potential to be more volatile than just investing in a fund that owns a smaller percentage of that stock, which would expose you to less risk. SPY is one of, if not the most popular fund traded, and it's designed to mimic the returns of the S&P 500. Remember, a Roth IRA's contributions are made with after-tax dollars, and all gains are tax-free, and as of 2024, a maximum contribution amount of $7,000. You can't contribute more than that. As I said earlier, you can withdraw your contribution amounts at any time, but you won't be able to put them back in. So don't go thinking you're going to borrow money from your Roth IRA and repay it later. That's not going to happen. Also, if you withdraw any of the gains, you'll be taxed in your current income tax bracket, plus a 10% penalty, which kind of defeats the purpose of long-term investing. So please avoid touching any of your profits if at all possible. Earlier in the video, I mentioned the current income limits for a Roth IRA. So if you make over $146,000, you can't contribute the full amount. And if you make over $161,000, you can't contribute at all. Or can you? There's a little known secret called a backdoor Roth IRA that if you have any time you may want to look into if you exceed the Roth income limits. By being committed to your financial future and becoming a disciplined investor, you have the potential to have a lot of money in your retirement years. If you're able to max out your Roth IRA every year, which currently equates to $7,000 a year, or $583 a month, or roughly $19.17 a day, if invested consistently, you can retire a tax-free millionaire, even if this is your only retirement account. So after you like this video and subscribe to my channel, go and set up a Roth IRA. You owe it to your future self, and when you look back 40 years from now, you'll be glad you did it. With that said, thank you all so much for watching. I really hope you liked this video and that you got something out of it. I encourage you to watch more videos as it relates to personal finance and investing on this channel. And if you haven't already, please like and subscribe. Thanks for watching.